Hey guys, how are you today? It's May 27th, 2020. We're going to do a little trade review. Welcome to the YouTube channel if you haven't been here before. All right, so what we do is we go over my trades for the day, and I'm going to talk about my insights and if there was anything interesting that happened today, which there was. So let's get into it here. Really weird, messed up trading day for me, at least, because I managed to get myself into a bit of a hole, and then I managed to get out of it and end the day break even, slightly, barely green, okay? But where I was before that was a place you really don't want to be, all right? So let's go over how I managed to do that and what could have possibly played into that happening, basically, okay? So we went into today, the futures rallied above yesterday's highs and we closed weak yesterday. So we could expect some bull squeeze action today, especially if people were bearish holding overnight. And that's been the theme lately, is where the futures rally overnight, and after closing week, the futures are rallying overnight. That's the general idea, okay? So this is where we opened today, and you can see that it's holding these higher lows, holding 26 period exponential moving average. So generally, as long as it holds that, you can say we're pretty bullish, right? So going into today, that was one level I was keeping an eye on. And if you want to look at the NASDAQ real quick, it was a similar story, except that the NASDAQ was opening up relatively weaker today. This was the close on the NASDAQ yesterday. You can see that we closed with a double bottom near the lows there. We opened below the low of yesterday on a lot of tech sector names today. So that means that we can see that there's money coming out of the tech sector and going into other sort of laggard sectors. If you've been looking at the cruise lines or the financial sector, you can see that. So you look at like JP Morgan, for example, huge bull the last 2 days, and XLF in general, right? So you can see that the money's flowing in elsewhere. Tech was very weak today, continued the weakness, and I was looking to call a bottom at a certain point of this, all right? And I was in the green for most part of it, except I messed up drastically on some risk management. So we'll get into it. We'll get into exactly what had happened here. Taking a look at what SPY did first off the open, we didn't get any kind of bull fake out to get like shorts from yesterday squeezed out. First thing what happened, we sold off. So as soon as the market opened, you can see that we were chopping this 302.10 area, and then we started to sell pretty aggressively. So in the first 10 minutes of trading, it was just lower lows almost every candle, just a bloodbath, okay? So once we got a bit extended here, I decided to start scaling myself into a bullish position. And I'll show you what trade I put on real quick here. Put on the 301 short put, long to 299 put, okay, collecting a credit for that trade. And I was taking a look at what happened. So that I entered that trade at 938, and I would have been basing my stop at that point off of the previous higher low on the futures chart. So what had happened was we initially got some sort of a bounce, and after to this moving average, to the 12 period moving average, looking at a 1 minute chart, send it to a 2 minute chart, and you can see that looks like a nice painted bottom. But when I saw how bearish it was, and now the NASDAQ kept selling, I decided to initially hedge this position. So I decided to buy some puts to hedge against it when I saw that it was likely that we would see some further downside because of how obvious this bottom looked. You can see that perfect bullish engulfing pattern. That is too obvious. Therefore, the opposite will likely happen. And that is exactly what happened. We continue to sell. So I got long some puts right here, not the puts that I was short. So I sold the 301s, bought the 299s, and then I bought the 300s, which would be in between my spread. I'm more short than long at this point, okay? And then I started selling them for profits around here. So I was out of them. And I could have waited a little longer. I could have trailed the stop on those puts. I think it would have been a slightly better choice to wait for the price to come a little closer to that support level. So we were coming down to this 299.90 area, which would have been the low of consolidation of yesterday before we got the massive dumps. Okay, so that 299.90 was a key area. Since, of course, we just sold right through the level I was talking about in the futures chart, which would have been 3008, and that's not exact futures data, that's just this one on TradingView. So what had happened then was, as we bounced off the support 299.90, I put on some more trades. All right, and I'll show you what I did here. And I actually made a little bit of a mistake with this, and this kind of led me to go down a bit of a weird trajectory in my trading today. So take a look at this. So after I was down to 300 puts here, I put on this trade, short 299 and buy 297. But I had forgotten that I was already long 299 from the other spread. So what I actually did at that point was I sold the 299 put that I was long for a profit, and I bought a cheaper put 297. So this is actually an interesting thing here. And basically what I did was I locked in a mini profit inside of my option spread. So I'm short a put, I'm long a put. What I did was I sold the long put and I bought a cheaper long put. So I made the spread wider, which means that it's slightly riskier, there's more exposure, but I did lock in a small profit in that spread. Now, I didn't do this intentionally, so that was a mistake. What I would have rather done was either sell the same spread, which was not what I wanted to do, or just be short another put and long another put. So essentially, I'm just kind of like averaging down the original position that I had put on. I'll be shorting a more out of the money put because I left room in the trade to scale in. You get it? So this right here, this is just noise right here. This is just a bunch of noise. So like I told you, I sold my 299 for a 297, and then I realized I had made a mistake. So I sold the 299 and then bought a 297. So at this point, I'm short a 299 put, I'm short a 301 put, and I'm long two 297 puts. And then after that, I proceeded to sell one of the 297 puts and buy a 295 put. So what I did there is I locked in two bearish trade profits inside of those credit spread trades. This is a really technical concept that I do not expect any of you to understand, but it's something that I've recently discovered, and it's quite interesting actually. So the mistake with this was that I was widening my spreads, therefore having more margin requirement on this trade. So what I did by accident here is I actually maxed out my capital unintentionally. After this had happened here at 1044, I was trying to hedge myself, right? Because I saw that the market was pulling back to the moving averages, and I said, okay, you know what? I'm gonna try a scalp here to hedge type of thing. And I couldn't hedge because I had used up all my capital essentially by widening my spreads. So that was a big mistake. So all this stuff was exactly that. So these two trades would have been widening those spreads and basically taking profit on those puts and buying the cheaper puts while still being short the 301 and still being short the 299 puts on the spiders. Okay, so basically what had happened here is that after 1, 2, a third leg down with no follow through, we resulted in a bit of a rally. Take a look at the 5-minute chart on the spiders. Look at where we rallied to, right to the 12 exponential moving average, and then the sellers came right back. On the Qs, it was 277.50. That level was having a lot of trouble getting above it. You can see how we rejected it almost perfectly. If you're watching the tape at that point, you would have seen those held offers, and we lifted. The high of that candle was 59. We tried to lift it approximately twice and failed. That was a good opportunity for a short, and I was looking right at it. I didn't take it. SPY continues lower for another leg down. This is the low of yesterday. Keep an eye on how it reacts around the low of yesterday. Sells right through it. Massive panic sell, guys, okay? And because my capital was maxed out, the loss that I had at this point was way too big, okay? So I was looking at this and I'm saying, okay, I'm down 40% in my account. How did I get here? And what am I gonna do to get out of it? I stuck around and watched. This right here, the maximum sell that we got was sweep the entire order book. I've seen this before. It's that literally there is nobody buying, everybody is selling. The retail is being way forced out of positions. They think it's the end of the world. The whole order book is being swept in one shot. After that happened, massive bounce. This is sort of how I was seeing it. It differs on different time frames, but just look at it from the top here. So you can see one leg, two legs, a third leg failure resulted in a bounce. Take a look again here. One leg, two legs, a third leg, massive, resulted in a bounce. And then once it got back above the previous low, you saw that it was a failure. And then that massive sell there, the failure, third attempt lower, that is what marked the low of the day. Now, on the way back up, very, very interesting price action on the way back up, guys. Because of how bearish this was, everybody is thinking, oh my God, it's so bearish. I'm gonna short as soon as it gets back to the moving average. By this time, guys, it's way too late. It's a long trade at this point, based on how much the order book was just flushed at this point, just completely destroyed. You're looking at the hourly chart on the S&P, see how we dumped below the low of yesterday, and then we managed to eventually regain that low. Once we regained that low, power to the bulls. All right, took a while to regain it though. As I was saying before, it was very interesting price action. I'll tell you why. Because they made it look so bearish at some points. This right here, this was a massive washout, all in one shot. Massive washout, get FOMO for the bears. Everyone's saying, oh, here we go again, right at the moving average. Sell it, sell it, sell it, sell it. Buy all those puts. Massive washout, straight to a higher high. That's the kind of stuff we got, okay? We get up to the moving averages. This was SPY, the low of yesterday. We're going back up to it to retest it. Another massive washout. all in one shot, get everybody bearish because retail is thinking, here we go again, we're going to sell right off the moving average again. Huge bull right after that and sweep all of them out. So you can say, when was SPY in a 5-minute uptrend? You could say here, but I would consider this more of a 2-minute uptrend based on how quickly these higher lows formed. Now take a look at this. We get up to the moving average another time. Now remember, we've been selling off of the moving averages before. We get in between my exponential moving averages, another massive washout. This one looked like a news reaction, like a news headline reaction where you see them all react at once and you see the machine gun tape flowing a million orders at once. And what happens? So it was an inside bar and we held the higher low, and I was watching very closely. If the Qs and the SPYs were going to lose those 2-minute higher lows, then it was likely we can continue lower. But we held those 2-minute higher lows after that washout, and then we continued to a higher high. So imagine, you're trying to buy this dip, but there's a bunch of these washouts happening that are trying to convince you that it's still a short. These are the mind games that they play, guys. And at this point, you could say that that was our 5-minute higher low that had formed and higher high. SPY had officially changed the 5-minute trend. The Qs changed the 5-minute trend. XLV, XLF was in a chop range. But after we changed that 5-minute trend, you can see that the squeezometer started to go off here. And then we continued higher for a while. So the massive rally, guys, but on the way up, boy, was it tricky to stay long, right? I stayed long though. And I managed to get out of all these puts, these short options over here. So I went from being down 30-40% of my account to being break even. And that is bad risk management. Absolutely 100%. Last thing I'm going to share with you guys, one call scalp. So this is when I got out of my 301 short spread, pull back to that exponential moving average. At this point, I'm still seeing bullish price action, held bids all over the place on the Qs and everything. And I'm looking to scale into some calls just for a quick scalp. We had a lower low right to the moving average. I had a bid in at 31, I got filled, and then I managed to scale out 36, 35. I stayed in a little quickly on that one, but because I got in at a good price and I got filled at the bid, I managed to sell them on the offers pretty quickly as we were moving higher there. And if I would have trailed the stop or just kept the break-even stop in that trade, I would have had a lot more profit because we had popped up here. These contracts were trading at 46 or something. So that would have been a nice little profit on that trade if I would have been a little bit more patient. But of course, after the whole nonsense that I just went through, I'm not in the mood to really be patient. That was just a scalp that I thought had a high probability as one of the trades I like to take. And I took it, and that was it. And you can see another one of these massive washouts. You can see break the lows and then right back up. So, you know, that's why you got to be careful with your stop placement, guys. If you keep your stops right under these lows, you're going to get messed up by this kind of stuff. These algos that come and grab your stop and then this, especially during rallies that are obvious. So you got to really be strategic with how you trade this stuff, guys. All right. So the moral of today was that I made crucial mistakes. I maxed out my capital essentially by widening my credit spreads to the point where I had no more capital to hedge. So that was a big no-no. And I did it by accident, I'll be honest with you. I didn't realize in the moment that by widening those spreads that I was actually using up all my capital requirement essentially. I'm trading a small account, guys, remember. So I'm ending the day positive by 1%, thank God. And I got lucky, let's be honest. So stop with the bad behavior. And if you learned something from this video, guys, leave a thumbs up, subscribe to the channel, and I'll see you in the next video. Take care, bye.